And we're live for the final entrepreneur education session of Summit 7. So happy to have you here today, 1 week after the Summit 7 finale, for a conversation with the TNT leads and investors about maintaining those relationships that you have built over the past 8 weeks, or you're looking to build going forward with investors, talking about how you're going to communicate with them and get the most out of those relations that you built. Obviously, the money for those that raise money is great, but I'll honestly say, as most of our founders do, that some of the biggest value that you get out of these summits is the relationships that you build with the folks on the other side of the table that are cutting those checks. Because all too often they're past entrepreneurs themselves. They've walked this path before. They've encountered numerous situations in the business world that they can help coach and mentor you through. So we're going to just talk through some best practices on general communication with investors, build and thinking a little bit more about building those relationships, identifying the right people. Some folks, that came through the summit might have not been able to get a ton out of it in terms of connections. Well, we're going to start talking a little bit more about that first. And to talk through building relationships, I'd love to call on my lovely colleague over in Manitoba, Gloria, to talk a little bit more about how I should identify and target those investors, right? So how should companies be thinking about how they identify the right investors for them? Some folks might have come out of this summit and been like, maybe TNT isn't the right investor for me. So how should they be thinking about finding the right ones?
So I think this is really one of my favorite topics to talk about, relationship management in general. But I think relationship building and management with investors is something that I just personally find really fascinating. Having been an investor myself from like the past 5 or 6 years, I've been approached in different ways by different companies in regards to how they build the relationships. And so, there's, I think, maybe just a couple of things to keep in mind when you're thinking of how do I build this relationship and how do I kind of do it well, like right off the hop. So, first of all, like investors are humans, and mostly all investors really like meeting founders, even if it's many months before they are ready to raise a round. And there's this old saying that goes, if you want advice, ask for money. If you want money, ask for advice. And I know a lot of founders who built relationships with investors over a year or more just by asking them for occasional advice. This allows that investor to really get to know you, right? And it tees you up very nicely for when it comes around to the time when you are raising cash. When you ask for advice, it also allows investors to see how you're progressing and as you're building your company, and like how relentless you are in your approach. And so often those early relationships that you built kind of using this tactics may be some of those same investors that are the first ones in. And I think founders shouldn't underestimate what I really feel is compounding value of those regular informal discussions with investors. So I might kick it off with that.
Yeah, those are great. That's a great best practice on reaching out to investors and getting that advice, setting up those regular calls. What are some things that you should absolutely not do when you're looking to start that engagement with investors?
So I think one of the things that's always really important, and this will carry you a very long way when you're building relationships with investors, is you want to build a relationship of transparency right from the beginning, right? So when you're talking about your company or you're asking for advice, there's a couple of things: transparency around the struggles you're facing and being upfront with those, but right on the back of that, talking about what you're thinking as the solve for that plan, because that really helps to build confidence in you. But I think transparency is key. Don't don't be talking about things that you don't know that you can deliver on. Just yet. Don't oversell something from where you are right now. Be excited, share the plan, but be realistic and transparent in how you think you're going to get there.
Love that. Yeah. And something also to bear in mind here too, coming out of this summit, maybe your company realized maybe they're not as venture scalable, maybe they're looking for different types of investors. How do you, what's some of the research and things that you really got to be making sure you do ahead of time when you're thinking about so that long-term relationship building with an investor where you're trying to tee them up for a future round?
You're still asking me, right, Jesse?
Yeah.
Okay. So one of the things, and this same advice applies to myself as a lead when I look for angels to take part in our summit discussion, or take part in our summits as investors. Do your research ahead of time. When you go into a room, as much as you can, know who you're talking to, know what's important to them. Right? And if you are able to have some of this knowledge before you go into the conversation, you're going to save yourself a lot of time, and you're going to come across as really knowing your stuff and really prepared. And you're kind of going to hit on right away what you know is important to these investors that you're talking to, because not all of them have the same priorities or have the same opinions or the same outlooks. So understanding as much as you can and doing your research in advance is going to be helpful for you in this area.
Absolutely. Yeah. Thanks for walking us through that, Gloria. Obviously, we're going to call on you some more throughout the session here, but that's a really great way to get us started on thinking about kind of building and maintaining those relationships. So then the big piece around maintaining, obviously, communication, so critical, so important. And who better than the chief communicator here at Startup TNT, our very own Zach Storms, to talk to us a little bit about some effective sort of communication strategies. And we're going to be diving into like what does a good update looks at. But let's just start high level. How should we be thinking about good communication
Sure.
with
I mean,
investors?
let's start with the basics. Invite them all to a happy hour and chat with them at the happy hour. I think that's how we communicate. No, but in all seriousness, I'm reading a lot about team communication right now and high functioning team performance. And it doesn't matter which book or where you go for advice, it all boils down to communication. And so when you're thinking about your investors as part of your own team, your team of company owners, your team of company supporters, it really just boils down to simple and frequent communication with them. So, the other thing about communicating investor updates is it might feel a bit like a chore, but really, in some ways, you're an investor in your own company. So it's like, what do you want to know about your own business to make sure it's succeeding? What do you want to know on a monthly or quarterly basis? Which KPIs are you hitting for yourself, for your internal team of employees, and then for all of your advisors and board members and investors? Like, they should probably be getting somewhat similar updates. And so I like to keep it really simple, because otherwise it gets really complicated. So, we receive a lot of investor updates at Startup TNT, and I just kind of reviewed a few of them right before this call here to just kind of get a sense for what they are. And there's a lot of updates that don't say a whole lot, where there's just a lot of verbiage and some things that sound good. And then we get a few updates where it's like, hey, here right at the top, here are like the 3 to 5 KPIs that matter. And then here's some good news, here's some challenges, here's where you can help us. And maybe the whole update is only, a few paragraphs long. And so I'm a big fan of keeping it simple. It makes life easy for you, makes life easy for the people reading it. And so just remember, communication is key. I think that's all. That's the main points I want to make on that topic, Jesse. And then people want to put any other comments or thoughts on, like, what KPIs matter, what should you be sharing in your communication?
Yeah, feel free to share thoughts in the chat. We've got a number of different folks here on the call from a variety of different stages in terms of founders. If you've got some effective communication techniques that you're using, love to share. This is a peer-to-peer learning just as much as it is us doing the education. So feel free to jump in with any of that. Use the reactions buttons to raise your hand if you want to say something, or just yeah, post in the chat with any questions or comments or peer-to-peer learnings you want to share.
Yeah.
Thanks for that, Zach. Let's dive into, the sort of templates that we think are good, and maybe thinking about what are the essential components versus the unessential. And I'm actually going to call on Adrian here, who actually spent some time on the startup side with one of our portfolio companies, Cherry Health, before joining our team. So he's quite familiar with doing some of those updates to the TNT investors and others. So Adrian, you've outlined in a doc that we've got here on the back end some different thoughts around investor updates. So why don't you kind of walk us through, those key components as Zach said, and how you're going to keep that simple and concise.
Thanks, Jesse. Yeah, no, I hope everyone can hear me okay. So when we, I've been investing for a long time, right? Obviously started big public companies, so kind of came from experience with that. But when you're in the private world and in the angel world and VC world, it is a little different. And you can Google what is a good startup investor update looks like, and you'll get a lot of responses and a lot of different versions and views. Y Combinator has a bunch of versions. There's a whole bunch of templates out there. Fundamentally, I think it is important to be consistent and to be detailed, not fluffy, and certainly have quantity, like have some important quant in there. So I do have kind of a template I like. I don't know if it makes sense to just post it into the chat. But really, if I was to hit on start with a brief intro, right? Like what's going on? Hi, investors. These are the important things that have happened since the last update. If you're updating on a monthly basis, these updates get shorter, but then you're doing them more frequently. If you're on a quarterly basis, it's what are the key milestones, key achievements you think people should remember that you've accomplished since the last quarter, or challenges you've experienced since the last quarter. It's important. You're probably going to put them in again in a subsequent section. Don't be afraid to do repetition. People miss things. Don't be afraid to repeat that. That's your quick blurb of the intro, but don't be overly wordy, like just a nice one paragraph. Then important sections: sales and revenue, reports and metrics. This is our net revenue for the period reporting, not just gross. We see a lot of companies reporting gross revenue. It's great, but it's not informative enough. We investors, we want to see, like, are you really doing well? There's a lot of companies out there that have great revenue and terrible margins that aren't meeting their expenses. Like, it's important for us to see that, and don't be afraid to get granular. Like, if you have multiple product lines, saying, like, show us the different product lines so we get a big view, and it reduces. Fundamentally, think about this. You want to reduce the follow-up questions because you've answered them all, and investors have got a nice, comfortable feeling that they understand what's going on. So yeah, margin, like, show us the difference, show us the product lines, and then product. Everyone's got a product, whether it's consulting services or an app or a marketplace. You've got a product. Talk about your product. Talk about what your user numbers are, your daily active users, your monthly active users, if it's relevant, your churn. Like, if you don't mention your churn, anything you don't mention can become a potential red flag for investors when you're thinking about their follow-on rounds and coming back to you saying, well, they haven't told me how many people they're losing. Like, are they hiding something? You want to be open and transparent with people. Also talk about customer numbers. Like, these are the new customers we're excited about. These are the partnerships we're excited about. Like, celebrate your wins, celebrate your sales. If you haven't got to sales and revenue yet, this section's not exactly important, but give us a timeline. We expect to be in market by this date. That's fine. HR, new hires. So if you don't have any new hires since the last update, that's fine. We stand pat at this many full-time employees. That's great. And locations, we this many in this location or this many in that location. Like, that's great. Doesn't need to be long. But talk about your plans. Like, investors, you might be looking for that marketing person who's going to crush it. And the investor might know someone who comes free in 3 months and say, oh, I know you're hiring in 6 months. So that could be a great connection there and can really speed up your time to finding that next great hire. And then finance, right? So talk about your COGS, your cost of goods sold, how much you're spending on marketing, what your G&A is, if that's just your salaries for the most part, your customer acquisition cost. If it's different for different product lines, please give us that granularity. Lifetime value of your customer. And for LTV, tell us what the time frame is. If it's a 3-year lifetime value, like let us know. Like LTV can be calculated so many different ways. Like just let us know what that is. Cash on hand. A lot of founders are afraid to tell their investors how much cash they have left and what their real runway is. And I know, Jesse, like you have thoughts on this that you can share. If we can help, we can come with ideas and come. Jesse, do you want to jump in there?
Yeah, well, I think this is actually a good point to bring up. And I'll call on Gloria again, talking back on investor relations. Like, why are you doing this, right? Gloria, why are the startups doing this investor update in the first place, and really and writing all these different metrics? And I think Adrian still had a few more to get through, which we'll jump back to. But Gloria, why don't you answer that question first off?
Well, the reason that you're giving this information to your investors in the first place is they took a very early risk on you, right? Like they are bearing a lot of angel investing is the riskiest asset class in the world. And one of the ways that you are comforting your investors and giving them hope that, for whatever the X return is that they're hoping to get is by sharing this type of information that Adrian is talking about, right? So whether that includes operational, financial, competitive, whatever those things may be. But those investors took a risk on you from a very early stage, and the transparency that you're giving them through offering up this information is critical, because chances are you might need to go back to them again in the future for another raise.
Yeah. Not only that, well, you have to go back to them, but more often than not, downstream investors will call up your past investors and ask them, right, questions about.
That's a great point, and something that I've done in my own personal practice of angel investing, and what we do as part of our due diligence in our summit process is we get to a certain point, and if there are already angels that are on the cap table, we will often, call them up and say, what has the communication been like? What's your experience like with this company? And are you satisfied with the type of information you're getting and the cadence you're getting it? Like, do you feel well informed?
Yeah, right. And people who are well informed, right? They and part of a group around this company, a good team, right? To Adrian's point, can help deal with issues when they arise, right? And often you have a lot of unknown unknowns that you're going to run into when you're a founder, right? I've heard Gloria, Adrian, we all have examples of companies, right, where all of a sudden something came up that there was no way we could have known in due diligence ahead of time, and they're dealing now with an issue. And if you're dealing with it entirely on your own, right, you're often going to probably make the wrong mistake. You're not going to see the full picture, right? And so that's where Adrian's point about making sure you're telling them about the bad things, right? You're mentioning your situation around your cash burn, your runway, and even if it's short, right? The sooner you tell us that there's something wrong, the quicker we can help you overcome those situations, right?
It's important to remember, like, we are investors. We are literally vested. We have a vested interest in you, and we are invested in your success. So like we want to help, and we want for personal reasons, and we want you to succeed. We've invested in you to succeed. So really quickly, like the last things, your finance plans, if you have some, let investors know when you think you'll be raising, even if it's 18 months out. You'll hear this all the time from angels and venture capital firms. Like, keep the conversation going. Let people know when you might be investing. It helps you save time when you finally get to that round. And then last, and what I think is actually the most important thing to include in every investor update, is an ask. Remember, this is taking your time. Make this worth your while. Make your business get something out of this. Let investors know if you need help with anything, whether it's that hire, whether it's preparing for that raise 12 to 18 months from now, whatever it might be, whether it's a customer introduction, whatever it is, have an ask. Like everything you do should be to make this time worthwhile. Because this is going to a group of people with good connections, and one person might have that critical thing that you need and you didn't even know. I know we had someone in a summit did have an ask. They said, if anyone from AWS is here, we need help. And AWS showed up and gave them $300,000 of credits. Like that's just have an ask in every communication externally for sure. Now there's also some legal financial, like I know sometimes it's financial, but there are some legal requirements here in reporting. It's not in your updates, doesn't need to be in your monthly or quarterly updates, but we do have Michael Grantmeyer here from Osler. Jesse, should we take advantage of having sort of a preeminent startup lawyer on the call?
Yeah, absolutely. Yeah, Michael, why don't you walk us quickly through the legal side of the requirements around investor communications?
Yeah, sure. Happy to do it, and nice to be here. Thanks for including me in this, folks. So there aren't in the early days, there isn't really much in the way of kind of true legal requirements other than the obligation to give your shareholders your annual financials every year. But really importantly, and especially in the early days, I think a lot of the good hygiene and habits that the people in this call have been speaking to are important, because when you do raise your first priced equity round and subsequent rounds, there will be investor rights on the financial reporting front. And that'll include everything from annual financials to quarterly financials to monthly to budgets for the next fiscal year that have to be provided in advance of that year, and just general information request rights that investors will get. So I think a lot of what's being discussed here in terms of, like I said, that good kind of reporting hygiene, the good communication etiquette, and some rigor around how you actually think about the metrics that you're actually communicating will really serve you well when you, like, for sure, these rights are part of every round of financing. When you start raising a priced round, you'll have these more robust requirements. And I think developing those good habits now will help you as a company and as founders really slot into what you'll have to be doing going forward as you start to raise more capital. So I would just keep that in mind. And I mean, those rights can vary, but I think the key ones you should expect are annual financials, quarterly financials, sometimes monthly, and then an operating budget, which have to be given generally to your certainly your board, but also different classes of investors as well. And I'd also maybe say, just in terms of helpful feedback on what I've seen, and I mean, I get tons of investor updates that I'm included on for clients that I work with, and I always like to be a part of those, frankly. Because it's a really nice way to kind of see what clients are up to, and to try to be proactive about things. One thing I would say is always offer to include your lawyer or your service providers on those, because the good ones will really appreciate actually understanding what you're doing on the commercial front and where the business is going, versus just kind of the limited exchange on, hey, I need this contract or that contract drafted. So really good thing to do, and your service provider will appreciate you for it. The other thing is, I always find it's really useful when I see clients including what their objectives are for the next period of time, and say that's like 3, 6, 12 months. And that serves two really important roles from my perspective. So people on your kind of investor list that are not yet investors, but are kind of within your network and are people that you're interested in have investing, it's a very powerful thing to kind of build trust and an understanding of why your founder team is the right team to be building this business. When you can say in an investor update this quarter, here are our goals for the quarter and what we hope to achieve by next quarter, and then in the next quarter be able to say, hey, we nailed this thing, and this thing. We got close on this one, but here's why it didn't kind of fully come to fruition, and be able to actually have that conversation to discuss the wins and the losses, but to help people understand.
Oh, just lost Michael.
Michael, you've fallen off.
Okay.
Oh, he's back. Is he?
I'm going to mute him for now and see if we can get him back.
That the point he was making at the end there,
Yeah.
I heard recently, I'm gonna forget who it was I was speaking to, but they were talking about Neo Financial and their aggressive raising. And one of the things they had done, to Michael's point, that justified and that helped support their aggressive raising was they said every update said, we are going to do this with your money. This is the milestone. And they did it at an accelerated pace. And the reason they were able to continually raise those following rounds is, yes, it was quick and they were asking for a lot of money, but they had nailed every single thing that they said they were going to do. So that actually, to Michael's last point there, can be incredibly powerful and help you in those follow-on raises.
Yeah, which I think is also to a point too, here on your milestones, set realistic milestones, right? If you end up setting unrealistic milestones and you keep falling short of them, that's going to say a lot to your investors as well, right? Something that is often said in this arena is investors invest in lines, not dots, right? And what we want to see a line that's continuously hitting those milestone markers that you've set on the chart going forward. So if you set those milestone markers and that line keeps falling short of those markers over and over and over again, that's going to take notice, right? And not just the investors that are on your cap table, but the ones that you need to keep investing in your companies down the road. Zach, you made a great point there about setting up company updates for interested investors. Let's just jump on that one for a second, Zach. Why is that an idea that you personally like when you are looking at a company? You like getting some of their updates before you've invested?
Well, I've seen a few companies do this, and I think it is quite valuable. And I know of at least one founder that did this really well. And when he wasn't ready to raise his round yet, and every time he kind of met an investor that was interested, he would add them to his like monthly or quarterly updates. And when he went to raise his round, he basically had built a bunch of trust with these people, kind of like the example Adrian was talking about with Neo. Where you're talking about what you're doing, you're hitting these goals, people see your success, they see this thing going, and then they want to be part of it. So I think that it is a technique that can work really well to build a rapport and trust with investors before they invest.
Absolutely. Right. And even setting up, say, like there's a particular investor, especially a larger, VC firm or institutional investor that you want to get. Now, take Gloria's advice, like ask them for a mentorship call maybe once a month. Right, where you're going to get, talk to them for 15 to 30 minutes once a month, just having those touch points, right? Making a point of attending events maybe in the local community where they're going to be, so you can keep, seeing each other, talking to each other, hanging out, getting to know each other. That's all part of the game here. But this all sounds like a lot of work, right? And there's a lot of different things to do here, but we've got our final lead to come on the call, our newest lead to join the team, was helping us out the summit, was officially joined full-time now. We're so happy to have Lindsay here on the call to talk a little bit more about how do you do all this work around the investor updates? How do you make sure you manage it effectively? Lindsay, our newest member of the team officially, what do you have to say here on this topic?
Thanks, Jesse. Yeah, so I've worked in a startup before, and this was a question that the CEO had was, oh my God, this is another like body of work that we're doing. And so what we did to really, help ease that when you're sending these quarterly, if not monthly updates, is to get your team involved. So Adrian had listed out a whole slew of areas. There's product, there's sales, there's finance, there's HR. Get your team involved in writing those updates for the area that they're in. So product can write the product updates, sales can write the sales updates. And what that does, beyond taking that time off you, is it makes sure that they are actually tracking and maintaining those metrics, and so that at any time you have a good sense of where they're at. And it also creates buy-in with your team. If they're involved in this newsletter update, this investor update, they also get to know what's happening in the company, what you're saying. And so that, when we've been talking a lot about the trust with your investors, but it also creates an opportunity for trust with your own employees. So that's something that we found that was really helpful, and it allowed us to make our update schedule more frequent. So kind of going from that quarterly schedule to a monthly schedule when you can do that. And then you can reserve the ask question for yourself. But yeah, it's really being able to bring everyone on board and using your resources wisely and your own time wisely as well.
Yeah, and thinking about say like the financial side of things, right? Are there any concerns that you've had, when you were chatting with about kind of opening up the kimono to everybody around the table and the team on the financial picture? Is it kind of a good practice, not just for your investors to know your financial position, but also your employees? Is there some concerns there that you've heard before?
So I find when you're building trust, having that openness is really helpful. For your employees, it's also good for them to know, and it creates buy-in with your team if you need to really focus on sales when your team is pushing, saying, oh, well, we want to build our product, but you're like, actually, we need to push sales because our runway is limited. So sharing that and having that transparency with your team and with your investors is really good. Defaulting to open is generally what builds that trust more than kind of creating a nice story and then people keep poking holes in it or questioning you.
Yeah. And what about, so with the founder was like, I don't want them to know, maybe I'm going to be in a poor position, or I don't want them to be worried and afraid because then maybe they'll jump ship, right? What would be your advice to a founder with some of those concerns?
I've seen more often than not, people will double down and help get you to where you're going. Usually you have some sort of stake in it through employee options, or you are working for a startup because you want to be working on something that's really impactful. You may find that somebody does jump ship, but maybe long term that wasn't the person that you needed in the position. So creating that buy-in and that trust is what's really important. And if you were to tell me, like, we really need to focus on this because of this bigger company reason, then I'm much more on board. If you just say like, oh, I need you to focus on this, and you don't give me that full context.
Love that. Yeah, that's some great advice, Lindsay. Thank you for talking us through the work there, and thinking about some of those more negative moments in time where things might not be going right. Gloria, you've got some experience on the crisis management side of things. So if something goes wrong, what's the first thing that needs to make sure happens right out of the gate?
Yeah, I offered to offer a couple of insights on this topic because I just went through this very recently with a company that I invested in some years back. And there's not much I can share about it other than to say that this particular company had a major breach into their security from a previous disgruntled employee. And so it wreaked major havoc. Almost every investor received emails and communications that were, like some falsification of either something true mixed with something fake, and it was just a big mess for this particular company to deal with. And so I think just a couple of the things that stood out for me in regards to how they handled it is maybe some of the things I'd like to share here today. And so first of all, it's inevitable that at some point in the build of your company, you're going to go through something difficult, right? And so knowing in advance where some of your weaknesses lie is really important. And to in advance, as much as you can, to build a bit of a crisis management plan and to put it in place and do risk assessment to see, do some kind of role-playing scenarios. And I think that that helps you should you have to go through an unfortunate crisis. Couple things that come to mind are, it's really important for leaders to be visible in a crisis. This is not the time to back away. This is the time to be full front and center. If you as a leader are not visible, investors will likely take note of those who are, and that's not a position that you want to be on. it's the management team that needs to work hard to be the drivers of the narrative, so that it remains within, your control. This is not the time to cancel investor meetings or pull back on investor communications. By all means, make those calls, video conferences, Zoom meetings, whatever. Respond to the questions, and bear in mind, commitments that may have been made. Communicate often and as clearly as you can, not just when there is something new. And bear in mind that probably providing business as usual comms is not enough when you're in the middle of a crisis. So being available to take calls from investors is really, really important. And this is something that this company did well with me. They called me regularly, probably once a day for the week that they were really in crisis, to give an update on how they were managing it. On that communication piece, though, make sure it's relevant to whatever the crisis is. To an investor seeing a red screen, it's not necessarily, reassuring or interesting to know that a previously communicated strategy is intact. They want to make sure that, and it gives a lot of comfort that they can see that your communication and your strategy is fluid and adapting to whatever crisis you're in. I would also suggest to avoid predicting the future. Right, that is something where you can get yourself into quite a bit of trouble, because things can change very quickly in a crisis, and predictions can either go stale really quickly if you're not correct in them, right? And then make sure that you, as the leader of your company or leaders of your company, that you are really well informed on a day-to-day basis as to what is going on, and that you are prepared for the questions as much as you can be, right? And bear in mind too that you don't always know how long a crisis will last. So think about the sustainability of yourself, how you're pacing yourself. Are you going to be in this for a while? Is this a short crisis? What's a working pace that you and your team can sustain going through a crisis? And just know that this crisis, there's the saying, this too shall pass. This crisis too is going to come to an end, right? And so be prepared for when the world turns, and the time will come when your investors and the market will be wanting again to listen to what your management plans are for getting out of this, and setting yourselves up for an even brighter future coming out of that crisis. Hopefully that helps a little.
Yeah, that was great advice. Great case study there as well, Gloria. Thanks for that. Thinking about even some of those, maybe less crisis moments, but just like you're falling short, you set a milestone, something that, we've seen this before. You're making a pivot slightly in your company, and all of a sudden you've got HR issues or things like that. What should sort of be the first instinct of the investors, Gloria, or sorry, of the founders, when they hit those moments where things start to go even just slightly off track, right?
Oh, dig into it, right? Like really understand why you're facing this problem in the first place. When the whole point of trying to make sure you don't get into a crisis is dealing with problems while they're small. And if there are systemic issues or root issues that you need to fix, and you're avoiding doing that because it's time consuming and difficult, that is when things can start to go deeper and deeper sideways. So if you're identifying an issue from whatever department or whatever area of business or part of your business where you're struggling, dig into it as soon as you can and understand what you're dealing with sooner rather than later.
Absolutely. Yeah.
On-
Love
on
that
this-
advice.
On this,
Adrian, yeah, jump in.
on this, Michael, are you back? Like, is your microphone and camera working? Are you back in place?
I think I'm back. Let me know if you can't hear me though.
We
We
can
can
hear
hear you,
you.
we can't see you.
I'm staying off of my video for the moment just to make sure I don't get dropped again.
Yeah,
it's
okay. So like there are some things that a lawyer, your lawyer would probably recommend you don't include in crisis. Like if you're getting sued, or let's say you have an employee you have to let go. The sort of generalities, Michael, you want to comment on there?
Yeah, like I think it's just those kind of sensitive issues are probably things you want to run by whoever's supporting you on the legal front first, just to make sure that you have just like a packaged, like good understanding of how to communicate those types of things. And it's, you know, it's by no means, my comment is absolutely not to tell people, you know, sweep those things under the rug and don't tell your investors. That's absolutely not the advice here. But I think it's more of a question of, you know, there's a difference between just candidly communicating what's going on and you know, speaking to a professional who can help you rationalize what is actually happening and what the implications are in a way that you can kind of communicate something that's pretty concise to your investors, that actually gives them a sense of the, you know, the risk profile of whatever you're dealing with, that doesn't kind of overblow things unnecessarily, or alternatively doesn't understate what's going on. So definitely those are things that you want to profile with whoever's supporting you on the legal front ahead of time. You also want to be kind of careful about disclosing like personally identifiable information about people. You know, like, well, kind of a flippant example, but like, you don't want to be sending people's like SIN numbers out there, for example, as part of your updates. And so you just want to be careful about how you actually refer to like the team, you know, referring to people's names and their positions within the organization. If you're kind of giving like an employee update is totally fine, but you just want to be careful about not oversharing, partially too, because there's really no reason to kind of go into the like incremental details about people, but you just want to be careful about some of the information you're putting out there. And if you're ever unsure, it's kind of like an easy call just to ask whoever your lawyer is, just if there's any concerns with how you're communicating something. But you know, bear in mind there are some operational matters that affect the company that you just want to be polished on, and sometimes, you know, your service providers can help you with that.
Yeah, I'd like to jump to Lindsay here. She's got a follow-on comment. Go ahead, Lindsay.
Yeah, just about how you're communicating in these updates. You know, some things are not going to go well. Maybe you lose a customer. When you're communicating that, don't place the blame on the customer or something else that happened. Just acknowledge we lost the customer. You know, if you need more details, feel free to follow up with me, because your reputation and how you communicate is also conveyed through these new newsletters. So you want to keep that positive.
Yeah, I just posted a book actually that Tim Lin gave to me called Extreme Ownership, which basically is exactly that topic, Lindsay, is if you know you failed to get the customer, it's not that the customer, there was something wrong with the customer. It's that, you know, maybe you didn't know something, right? There's certainly, but you take ownership of that. I didn't know this thing. I'm going to do better in the future to make sure I know better about what the customer's needs are, or anticipate market conditions or whatever it is, so that that doesn't happen again. And if you keep blaming blame on everything else, you're only going to end up, you know, just kind of going down a spiral, right? I think all the way down to the bottom, right?
Yeah, people don't remember what you say, but they remember how you made them feel. And so, I mean, that's kind of all of this. If you're making them feel through these updates like you're on top of it, they're informed, you're top of mind, that's fantastic. And so then you want to make them also feel like you're reading good content and there's a really great person behind all of this as well, rather than somebody that's, you know, going to shift the blame onto somebody else.
Yeah. And one other comment I also make, these are great points that I've experienced with some companies here in my portfolio when they've kind of sort of crises. There can be a instinct to be like, I'll fix it. You know, I'm going to be able to fix it before I have to tell people, right? I can get the sales numbers up next quarter, and that'll make sure that they'll manage it. All of that sort of situations, like that's that instinct, that mentality is the reason like Enron happened, right? There's a great book called The Power of Noticing that talks a lot about this, sort of that slippery slope that you can end up kind of falling down. So make sure that you aren't having that instinct that's like, okay, I can fix this before I have to tell anybody, right? It's like I can fix the scratch on dad's car that got bumped into in the parking lot before I have to tell dad about it, right? Just communicate with them. Like they can probably help you fix the scratch better than before it becomes worse and worse and worse and starts to rust, and then you have these, whole issues that play out. We're getting into the final bit here, and I'd love to pass this over to Adrian and Zach, who maybe want to get a sense of what we got to do some open Q&A here for the last about 10 minutes as I check out of my hotel room here in Regina. So I'll pass it over to Adrian to take us home.
Okay, yeah, actually, I was just saying Zach's good at getting audience engagement going. He's sort of just an expert at it. But we would love to hear questions. Zach, why don't you drum up some questions here?
Sure. Well, I don't know. I feel like there's almost like sort of like note sharing going on right now. Like Victoria is sharing some notes. There's only like things that have worked well or not worked well for them in the past in terms of updating investors. Here I'll start off with an easy one, which was, this kind of blew my mind. There was this one company we had invested in, and they would always start off their update with their months of runway. And their first few updates, because they just raised a big round, was like, we have like 56 months of runway on this. So I don't know, just like there might be some simple things you can do in your newsletter to just consistently keep people engaged.
How about, anyone in the crowd, like by all means, if you have questions, like just jump in, but please, I know we have some founders here, but yeah, any questions you have, we get a lot of updates.
Is there any more concern about what you feel comfortable sharing in your updates? Like this, I think, Michael Grantmeyer kind of touched on this, like don't share anything that would like personally points out an individual, but is there anyone concerned about like what they feel comfortable sharing just about like their company and what's happening? Because they're afraid that it might get into the hands of competitors or the wrong people. Adrian, do you have any advice for that?
I think, yeah, I have some advice. I'd say that we can, when we were doing updates, like there's a natural human nature to be afraid of giving away a strategic thing to the competition or that. The reality is, I think we probably aren't as our ideas are often in the competitive world. Like our competitors have maybe thought of the same things, and we shouldn't be afraid to share with the investors. Like investors specifically are probably not invested in your competition. They're invested in you, right? They're probably not going to give to your competition, but doesn't mean it won't happen. But I think that if they're your competitors, like they understand your market, like I think we see founders sometimes oversensitive about competitive stuff. Now every now and then there are research development groups where this is not, it is important to be very novel, but I think in sort of general commerce, like we sometimes over stress about sharing what our strategy is.
Yeah.
And honestly, your investors want to know. If you don't share, your investors are going to call you and say, "Why aren't you thinking about this?" So actually, I am thinking about this, but I didn't communicate to you that. And if that investor calls you, that that 5 or 10 others are thinking the same thing.
Yeah, I mean, there might be some interesting questions to ask yourself on this topic, and then I think we should go to Samantha's question to finish it off here because I think she's got a good one there that we could discuss. What would you do with the same information if one of your competitors had it? Like, could you actually action that into something to destroy them? Probably not. And then also, like, what would be expected of a publicly traded company to disclose? And if you're disclosing the same type of information to your own investors, like, do you really have anything to be concerned about? So your revenue, the basic things that you expect a publicly traded company to disclose. Like, why would you not feel comfortable disclosing the same thing to your own investors? Maybe a couple of ways to think about it.
Here are things I would not disclose is deals that are not signed.
Yes.
I wouldn't disclose like X company is our next customer. We've been in talks with them. That might just bother them and they may not close your deal. If you're in an M&A conversation, for sure, don't disclose until that's closed, and because it can screw up your deal. Yeah,
Yeah.
it's important things. Not
All right, let's take Samantha's question here, Adrian. I think you brought up a couple of like resources. I don't know. Do you have can you share any links in the chat there? So Samantha's asking us like, okay, I want to get started on this. You know, what are some templates I could look at, some examples I could look at to give me some ideas, and then I might lead into okay, how to get started. Let's just talk about that for just a second. So,
like I typed up an outline, but it's not an example. And if you Google investor updates, there are a ton. And
all right. Well, let's see if anybody can Google investor updates right now and post 2 links that might be useful in the chat.
the problem is some of them.
Yes. See if someone can find 2 useful links in less than a minute here in the chat.
Y Combinator, I think Y Combinator investor updates would be what I would Google.
Here, you know, and also here's maybe just some general advice I would give for anyone who's thinking about how to get started, which is like, have you set goals for yourself for the next quarter? Like, you know, we're kind of at the end of the month, so we haven't done this. You know, we're basically 6 months into the year. Like, did you set goals for your company at the beginning of the year? Do you have specific goals for the next quarter? Are you reviewing them? And then what metrics do you care about to hit those goals? And those are probably the same metrics you want to share with your investors. And that's like kind of a simple way to get started. And then your update is actually really simple. It's like, here's our goals, here's our metrics that we're tracking to meet them. And then you can just add in kind of like 2 or 3 sections. It depends how detailed you want to get. You can add in different sections for each one of the different aspects of your business that Adrian kind of mentioned around like finance, team, product, sales that are happening. Or you can keep it even really simpler. Like, here's the positive things that are happening. Here are the challenges we're facing. Who can help us with these things? I've seen both work pretty well. As someone who receives a lot of updates and often scans them really quickly, I like the short ones. Other people really like to dig in, the deeper ones. So yeah, you could ask ChatGPT for a template and see what they give us. That's actually an interesting idea, CD. Okay.
I can also, we could potentially, you know, we have some really good ones. We would need disclosure or permission. We could theoretically come up with like I've got a template, but taking out any identifiable thing we could share for anyone who's interested. Follow up with us afterwards. It's you can just do your friends at Startup TNT, or you can email me directly or someone on our team directly. So here's my email address in the chat. Follow up directly, and we can send a template once we've sort of de-identified any identifying features on it. And if you have any follow-up questions on that template, we're happy to answer those. And I hear Victoria's adding a whole bunch of stuff.
Victoria's adding what ChatGPT suggests, which sounds maybe a little excessively formal and mundane, but not bad suggestions overall.
I actually think it hits a lot of the, you know, the key metrics, but people can pretty quickly tell what ChatGPT generates and make sure to add in your own like strategic flavor to this, a little bit more context behind the numbers.
But this ChatGPT is hitting a lot of the things that we already mentioned. Right?
It's true. Yeah. So we're as smart as ChatGPT. So that's good to know.
I should have just used ChatGPT before preparing. I should have just saved some time.
Yeah, no, I agree. It's not a bad place to get ideas, but I don't know. I've had limited use of ChatGPT, but I've used it a couple of times and found the wording a little bit too generic for me. So, but yeah, I agree. It's a great place to start. Okay.
So if there's no other questions from the audience, I think we can sort of wrap it up. I wanted to thank Michael from Osler. Like, thanks for your comments. Thanks for coming and helping out. And then thanks to all the TNT guys and everyone here for attending. Victoria, thank you very much for your contributions in the chat. It's been fantastic.
Yep. Thanks, Adrian, for facilitating, and Jesse, even though he's not here.
Really, Jesse, I'm kind of riding on the tail end here.
Well, you're the last facilitator I remember, so that's what I'm thinking at the end.
Perfect. Thanks, everyone.
Have a great day. See you at happy hour.
Yeah, that's
Yeah,
remember.
Join us tonight. Join us tonight at happy hour. See everybody.
Bye, everyone.
Okay. Live stream has stopped. We can end the meeting.
Okay. Thanks, guys.
Okay.
It's good.
Yeah. Thanks, everybody. I'm going to end meeting for all. So we all going to get booted.